morning. I'm Andy Myers at Weiss Research, and this is your morning market update for Tuesday, December 6th. We're seeing a relatively flat start to the trading session on Wall Street, but the focus of most investors remains on Europe, following yesterday's warning on government bonds by Standard & Poor's. The rating agency placed the sovereign debt of 15 Eurozone nations on CreditWatch negative, meaning they could all be downgraded within the next few months. The warning includes all 6 countries in the monetary union that currently have AAA ratings: Germany, France, Austria, Finland, the Netherlands, and Luxembourg. The move may put pressure on European leaders to act quickly on steps to address the sovereign debt crisis when they meet for a summit this Thursday and Friday in Brussels. German Chancellor Angela Merkel and French President Nicolas Sarkozy are pushing for the enforcement of tougher budget rules and the ability to impose sanctions on countries that violate deficit limits. Investors are also hoping that a new fiscal pact would prompt the European Central Bank to move aggressively to buy the bonds of struggling nations. S&P's warning did not come as much of a surprise, since earlier this year it downgraded the United States, which is generally viewed as being in better financial health than Europe. So the move is not having too much of an impact on the markets. We are seeing some modest losses in stocks across Europe, and the region's shared currency is losing more ground against the dollar, giving back some earlier gains. Meanwhile, the dollar's continued strength is weighing on commodities this morning. Crude oil is dropping back below $101 a barrel, while gold is falling by about $20 to just above $1,710 an ounce. We're getting more details about the implosion earlier this year of the bankrupt broker-dealer MF Global. According to the Wall Street Journal, former CEO John Corzine dismissed several internal warnings about the ballooning risk of MF's European sovereign debt investments. Corzine and MF Global's board reportedly let their exposure to European bonds grow from about $1.5 billion to more than $6 billion, prompting the resignation of the firm's chief risk officer in March. We also have a new development in the ongoing investigation into the oil spill in the Gulf of Mexico last year, caused by the explosion of the Deepwater Horizon platform. Published reports say that BP is now charging Halliburton with destroying evidence that the cement they were using on the rig was flawed. A Halliburton spokesperson told the Wall Street Journal that BP's claims are without merit. A couple stocks to keep an eye on this morning. Darden Restaurants is falling 9%, making it the worst performer on the S&P 500. Its profit forecast for the current quarter came in well short of analyst forecasts. But one stock moving in the other direction is General Electric, up nearly 2% right now. Bernstein Research boosted its rating on GE from market perform to outperform, citing strong earnings and the rising potential for a dividend hike. That's the latest from Weiss Research. Have a great trading day.